Hi guys, so in this video I want to talk about line items, the importance of line items as well as the importance of reflecting the correct line items in the correct financial statements. And the reason for that is that yesterday I was assisting a friend of mine with his financial statements, and I soon realized that he had reflected the correct line items but in the incorrect financial statements. And it's very important that your financial statements, guys, are free of any errors or any mistakes. Because let's say you want to apply for a loan, you want to secure a loan because you want to finance, say, the buying of a van. The first thing that they ask from you is your financial statements. And if your financial statements are not in order, the chances of you getting that loan are very slim to none. So it's very important that you guys make sure that your financial statements are in order. And in actual fact, that's the reason why I want to make this video, so that I can assist you guys with making sure that your financial statements are in order. Okay, so the first thing that I'm going to do is I'm going to read this scenario, and then after which I'm going to explain what's going on here. And then we are going to do a number of calculations over here. And then I'm also going to explain lastly what's going on here. So let's read the scenario first. Sipho's business is growing and he has recently bought a small van. The cost of the van is 40,000 rands and has a useful life of 4 years. To finance the purchasing of the van, Sipho took out a loan of 50,000 rands at 10% interest per annum. He is unsure of the treatment of this transaction and asks for your assistance. So guys, we've been provided a bunch of information as it relates to the cost of the van, which is 40,000 rands and has a useful life of 4 years. To finance this particular van, Sipho took out a loan of 50,000 rands at an interest rate of 10% per annum. Now we have to assist Sipho with the treatment of this transaction. So maybe just before I begin with my calculations, let me just give you guys the standing definition of what depreciation is. So the standing definition of depreciation is the extent to which you absorb, consume, or exhaust an asset. Each and every asset has a useful life. As mentioned here in this particular scenario, the van has a useful life of 4 years. So this basically means that Sipho will use the van in year 1 and year 2 and year 3. And then lastly, at the end of year 4, this particular van's value will be 0. The value of the van will be 0 because this van would have depreciated all the way down from 40,000 rands all the way down to 0 rands basically. So that is what depreciation is. The standing definition is that depreciation is the extent to which an asset is consumed, used, or exhausted. Right. So let's first just deal with depreciation. As we can see here, that Sipho has basically capitalized the cost of the vehicle, of the van. Maybe just before we go into explaining depreciation, let me just explain what this is and what's going on. So here we have the income statement over a period of 6 years, from year 1 all the way to year 6. Of course, Sipho will purchase his van in this year, year 0. Okay, cool. In year 1, at the beginning of year 1 or at the end of year 0. Okay. So here we have an income statement. We have revenues, which are consistent over year 1 all the way to year 6 at 150,000 rands. We also have cost of sales, which range from 80,000 rands all the way to 91,000 rands over a period of 6 years, from year 1 all the way to year 6. And then we have our gross profits, which is the difference between our revenue and our cost of sales. We have a total of our expenses, which is made up of our depreciation. Our expenses are made up of our depreciation, our finance cost, which is our interest that we are going to be paying on our loan that we are going to be using to finance the van. And then we have other expenses. And then we have our net incomes and losses. Okay, now, as you can see here, guys, is that this Sipo's business seems to be making a fairly consistent revenue over a period of 6 years, but making a fairly inconsistent net income or loss over the very same 6 years. And one of the reasons of that, as I mentioned this earlier on, is that Usipo has decided to capitalize the cost of the van. He has capitalized the cost of the van, which is incorrect, because remember, guys, that financial statements are prepared in accordance with certain rules or with certain frameworks. And the proper treatment of depreciation is to basically allocate it over its useful life. We've been provided with a cost value of the van, which is 40,000 rands, and a useful life of 4 years. So what we basically have to do is to allocate this depreciation over 4 years so that we can basically treat depreciation correctly. So what we are going to do is we are going to expense this depreciation cost over 4 years instead of capitalizing the total cost of the depreciation over 1 year, because it doesn't give us because it gives an inaccurate depiction of Sipo's business and his incomes and losses. In 1 year, he makes a negative of 10,000 rand loss. In the following year, he makes a profit of 28,000. And then in the following year, year 3, 23,000. In year 4, 21,000. And then in year 5, he makes a loss of 20,000. So it seems as if in the years that he purchases his van, he makes a loss because he has treated depreciation in an incorrect manner. What must happen is we need to calculate his depreciation expense over 4 years divided by 4. Enter. So his depreciation expense will be this is actually 40,000, will be 10,000 rand each and every year. So we have to expense this 10,000 rand over the van's useful life. So what's going to happen is this. We're going to plug in 10,000 rand here, and then 10,000 in year 2, and then 10,000 in year 3, and then 10,000 in year 4. Now this is a correct treatment of depreciation. We've basically allocated this depreciation over 4 years. And then in the 5th year, at the beginning of the 5th year, Usipo will purchase another vehicle at 40,000 rands, and his depreciation expense will be 10,000 that year and 10,000 in the following year. This is the correct treatment of depreciation. Let me just change the color of this cell. As you can see, guys, that Sipo's business is no longer making a loss. He's now making a consistent income in each and every year, a consistent income of at an average of 1.8 each and every year, sorry. Okay, this seems to be making sense because his revenue is consistent at 150,000 Rand each and every year, and his incomes are consistent, ranging from 9,000, which is the lowest, up to 20,000, which is the highest. This makes sense. So remember, guys, that our income statements as well as our balance sheet must speak the same language. So Usipho, in the first year, he will now capitalize the cost of the van in his balance sheet, right? And then at the beginning of the second year, he will take the value of the van and minus the depreciation expense, which is sitting in his income statement. Enter. He will then do the same in the following year. And so on and so forth. So that at the beginning of year 5, the value of this van, of the initial van, is 0 rands. It started from 40,000 rands all the way down to 0 rands. And then at the beginning of year 5, he will purchase another van. And then this will go on and on and on. So what we've basically done in essence here, guys, is to allocate the cost of the van over its useful life. We've capitalized the cost in our balance sheet, and we've expensed the depreciation cost in our income statement for each and every year. Both the income statement as well as the balance sheets are speaking the same language. And then it further says here, to finance the purchasing of the van, Sipho took out a loan of 50,000 Rand at 10% interest per annum. The finance cost is 10,000. This doesn't seem to be correct. 10% of 50,000 is 5,000 Rand. Times 10%, 5,000 Rand, yes. So let's remove this. Let's plug in our 5,000 Rands and then click. There we go. Now Sipho seems, now we've treated our finance cost correctly. Our finance cost goes into our income statement. It's an income statement item. And as you can see here, guys, Sipho is making a consistent income of ranging from 14,000 Rands all the way up to 25,000 Rand. So this is how you correctly treat your line items, guys. I hope you guys found value in me making this video. Hope you found this video useful. And what I'll do is I will attach a link in the description down below of this spreadsheet so that you guys can maybe just fool around with it. Yeah. Once again, guys, please do subscribe to the channel and hit the notification bell so that you can be informed of new videos dropping. Appreciate the support, guys. Cheers.